What's up, everybody? Welcome back to the channel. My name is Dan, one of the co-founders of stocktrades.ca. On this YouTube channel, you're going to find analysis on Canadian specific stocks and most recently, Canadian specific ETFs. And that's what I'm going to continue on in this video. The last one we did, we went over the best Canadian dividend ETFs. I'll leave a link up top for that. But this week, we're going to go over the best Canadian REIT ETFs that provide instant one-click diversification and can give you full access to the real estate sector here in Canada very easily. So with that being said, let's get started. So just a reminder before we get started, smash that like button and head down below, subscribe to the channel, but most importantly, drop a comment down below. Let us know what REIT ETFs or even dividend ETFs you own right now, or you somebody who likes picking individual REITs or individual stocks. We want to hear from you. It helps us grow the channel and helps us produce more videos. So getting on to the first REIT ETF we're going to speak about today, that is the BMO Equal Weight ETF. It trades under the ticker ZRE on the TSX. And essentially what this ETF tries to do is to create a balanced portfolio containing all 21 of Canada's REITs, and it wants to maintain an equal weighting towards each of those. And if we look to the holdings, we can see that it does maintain a relatively equal weighting. So we can see at the top, H&R Real Estate Investment Trust at 5.11%. And if we go to the bottom, Allied Properties has 3.86%. So it is a relatively equal weighting. You're going to see some variations between them, but that is overall the attempt of this REIT is to give you that overall broad exposure to the whole market. We can see that the top 10 holdings do contain a nice mix of both residential and retail. We can see a residential REIT like Boardwalk taking up the number 2 spot, and we can see a office/commercial REIT in Artis REIT taking up the number 3 spot. Following that, we have Capped REIT, they call it, Canadian Apartment Properties, and RioCan. So this is a large real estate ETF as well. It has net assets of just over 520 million and actually has volume in the 40,000 share per day range. So this is definitely one of Canada's most popular REIT ETFs. Now, if we look to performance on ZRE, this was a REIT ETF that prior to COVID-19 was outperforming the TSX index by a significant margin. If we looked at the chart, we can see that in early 2018 is where this REIT ETF really started to shine. And obviously the impacts of COVID-19, we've seen that it had commercial and retail REITs like RioCan and Artis in the top 10 holdings. These are real estate investment trusts that have taken a significant hit due to COVID-19, so its outperformance has faltered as of the start of 2020. But this is still a great REIT for broad diversity. As of right now, the ETF yields around 5% and has management fees of around 0.55%, meaning you will pay on an annual basis $5.50 for every $1,000 invested. As we get into more specialized ETFs like these real estate specific REITs, we can expect that management fees are going to go up, especially when we compare them to a broad-based index fund that can typically charge you, 0.05 or 0.1%. But overall, this is a great, well-rounded REIT if you want broad exposure to the entire sector. But we do have some REITs we like in this video that narrow down more on sectors we feel are going to outperform. So with that being said, let's look at the next REIT ETF, which is an iShares product. It trades under the ticker XRE. So XRE is the oldest REIT ETF we have on this list. It started in 2002. It is actually the largest as well, as it has over 1.14 billion in net assets. The ETF yields around 4.5% right now, and it has the same management fees as ZRE, which are around $5.50 per every $1,000 invested. So how do these two ETFs differ then? Well, the top 10 holdings is actually quite different. XRE is essentially a very heavy play towards Capped REIT, or Canadian Apartment Properties REIT. It has at the time of filming, a 15.72% weighting. This is very, very heavy, and it also has a near 10% weighting in RioCan. So this REIT has arguably the most popular residential REIT and the most popular retail REIT in the country as their top two holdings. But you also might be aware that RioCan recently cut its distribution lately, and this has caused a lot of investors to go sour on RioCan. So it could be somewhat upsetting to somebody who's looking for a REIT ETF to see a REIT that has been hit so hard as the second largest holding. But XRE makes up for RioCan in its top 10 by adding a nice mix of industrial REITs, which we think will outperform moving forward. We can see that Granite REIT is the number 3 holding at 8.41%, and the company's top 10 also includes Dream Industrial REIT, which makes up 3.66%. And finally, Summit REIT, a lesser known industrial real estate trust here in Canada, makes up 3.79. Now, if we look to XRE's performance, it has been one of the weakest on this list, and that is primarily because of its exposure to a lot of commercial and retail REITs in the top 10. I mean, before we get to the chart itself, you can see RioCan, Allied Properties, H&R, Choice Properties, Smart Centers. These are all real estate trusts that have been hit heavily by the pandemic. And as we can see, before the COVID-19 pandemic, this REIT ETF was actually outperforming the index by quite a large margin. Not as much as ZRE, but still outperforming. And as we can see with the pandemic, it was hit extremely hard. And if we look at a one-year chart, we can see that XRE is underperforming the index by a significant margin, highlighting the struggles that these real estate trusts are currently going through. We can also see by the holdings again that this REIT ETF is very top heavy, especially when we look at the top 4 holdings. So the top 4 holdings in this REIT ETF make up over 42% of the total ETF. But the one positive note about this is the top 4 holdings, with it being Capped REIT, RioCan, Granite, and Allied Properties, cover essentially all 4 broad areas. Capped REIT being residential, RioCan being commercial/retail, Granite being industrial, and Allied Properties being office. So although this is very top heavy, it essentially owns what we feel are the 4 strongest REITs in their respective sectors. XRE currently yields around 4.5%, so while you're being patient for these office, retail, and commercial REITs to recover, you can enjoy a 4.5% monthly distribution. But right now, it's likely that this ETF continues to underperform until life gets back to normal and until these retail locations start opening up and negative sentiment towards them goes away. But this is still a very strong option for those looking for broad exposure to the real estate sector. But for now, let's move on to our next REIT ETF, which is CI First Asset Real Estate Trust, and they trade under the ticker RIT. So just a quick break from the video. Again, smash that like button and head down below and subscribe to the channel if you like this video. If you want to see more videos like this, head over to the channel after you're done. We have a ton of great Canadian content, and we really hope you're going to hop on board, subscribe to the channel, and join us as we continue to make more amazing content. But anyways, back to our last REIT. So RIT is one of my favorite real estate ETFs right now, primarily because of its sector distribution, and I really like how this is laid out. If we look at the overall distribution, we can see that the REIT is most exposed to probably my 2 favorite sectors, which is the residential and industrial sectors. This makes up over 50% of the ETF, and if we add in healthcare, it's sitting at around 55%. Yes, it does have 19% exposure to retail, but the thing is you're going to struggle to find a real estate ETF that doesn't have this type of exposure. So if we look over to the holdings, we can see that the top 10 makes up around 45% of total holdings. So this is, although still top heavy, a little more balanced. And we can see, again, this is going to be a very common situation. Capped REIT sits at one of the top allocations. And along with that, we sit with Tricon Residential, which is another solid residential real estate property. Finally, we sit with Dream Industrial REIT, which is one of the best-in-class industrial trusts. And then we go back to a residential in InterRent. Then again, 2 more solid industrial REITs with Granite REIT and Summit Industrial REIT. The one thing I really like about this real estate trust is essentially has no large commercial holdings, commercial or office in the top 10. Crombie does deal with commercial real estate a bit, but most of the assets in this top 10 are residential or industrial, which is what I really feel will outperform moving forward. And if we look to the performance, it's clear that this is having an effect on the REIT as well. Over the last 5 years, RIT has returned around 61.4%, while the TSX has returned 43.7%. And we can see that similarly to XRE and VRE, this REIT was outperforming. It has been outperforming since about 2017 when compared to the TSX. But the most impactful thing is we can see here that when the markets crashed, this REIT fell less than XRE and VRE. And we can see that over the last year or two, it is outperforming these other two in a large fashion. Now, it's still not outperforming the index when we go over that 2-year span, but it's important to note that all these REITs were hit pretty heavily. So just note that although RIT has been one of the best performing in this video, it is still underperforming the index and might continue to do so moving forward until life gets back to normal. Now, when we span RIT's performance out to a 10-year period, this is actually one of the very rare REIT ETFs that is providing double-digit annualized returns. It's the best ETF on this list. It has annualized returns of 10.7% over the last 10 years. It is very, very hard to get any sort of ETF that provides you with these types of returns, especially with the yield that this one is offering. Right now, it yields just shy of 5%, and one of the most important things to understand is this REIT ETF does have high fees. It has management fees of 0.75, meaning that you're going to pay $7.50 per every 1,000 invested. But if you look to recent performance, this fee has essentially been justified by its outperformance. So that's it for the video. Really hope you liked it. We went over 3 of what we feel are the best REIT ETFs in the country, including my favorite being RIT. I really think it is poised to outperform moving forward, and I like the fact that it is actively managed and has exposure to what I feel are the strongest sectors, being residential and industrial. Most of these REIT ETFs have very limited holdings when we think of the grand scheme of ETFs, but that's because there isn't too much here in Canada, and they tend to focus on the major players. All in all, though, all 3 of these provide essentially one-click diversification to the Canadian real estate sector, whether it be commercial, residential, industrial, office space, whatever you want, and they can help you avoid making mistakes when picking individual REITs. Again, really hope you liked the video. Smash that like button, head down below, subscribe to the channel, and we'll see you next time when we start speaking on more great Canadian ETFs.